Hey everyone, Daniel Snyder. Welcome back for another incredible webinar. Today, we're diving into achieving market success with Alpha Picks during these volatile times, uncertainty. And of course, as we all know, April has been wild from seeing markets completely take off a cliff to seeing quite the rebound right now. So we're excited to have Stephen Kress, who co-founded Alpha Picks, with us today. We're going to talk about the strategy. We're going to talk about what's going on in the market environment. But first things first, let me go ahead and get a quick investor disclaimer out of the way for us. We are not advising you personally concerning the nature, potential value, or suitability of any particular security. You alone are solely responsible for determining whether any investment, security, or strategy or any product or service is appropriate or suitable for you based on your investment objectives and personal and financial situation. This presentation is for information purposes only. Content is presented as of the date published or indicated and may be superseded by future events. It represents my opinions or Stephen Kress's opinions, which may not reflect the views of Seeking Alpha as a whole. Past performance is no guarantee of future results, and Seeking Alpha is not a licensed securities dealer, broker, or U.S. investment advisor or investment bank. And now, with that out of the way, should we also say a disclaimer for our country, or just get into the man, Stephen Kress? Steve, how's it going?
I'm doing very well, Daniel. Thank you so much for organizing this today. Truly appreciate it. Since many of the viewers are new, I'll give a little bit of background on myself. I've been in the investment world for over 35 years. The bulk of my career was spent at Morgan Stanley, where I worked for 13 years, running a prop trading desk in quantitative strategies. I've also been on the buy side at Northern Trust Global Investments. I also founded my own hedge fund in quantitative strategies, and I founded a fintech company in quantitative investment research that was purchased by Seeking Alpha about 6 years ago. So that's what has brought me here today, Daniel. Um, so Daniel, I guess I'll go into our presentation. What we're going to do is we're going to cover our quant vision. We're going to provide a little bit of information on the current market and economy. We're going to highlight Alpha Picks, which is a portfolio advisory service that we provide at Seeking Alpha. So it's actually a separate product than Seeking Alpha Premium. And we're going to tell you a little bit about that process as well. So getting into what our quant vision is, in a way, it's kind of specific. We want to eliminate emotional investing in the process of uncovering top stocks using data-driven tactics. So what does that really mean? It means that we don't want to rely on our neighbor for ideas. We don't really want to rely on management guidance for what they're saying on stocks. And we're really not speaking with Wall Street analysts. We rely on what the numbers tell us. And we look at companies and their historical numbers, but we're also forward looking, where we look at consensus growth forecasts from Wall Street analysts and we combine it together. So it's very much a data driven process. And when we assess our companies, we take a company in a sector and we compare it to all the other companies in a sector. And through our quantitative metrics, we filter out the strong companies from the weak companies.
It also means when the VIX spikes, you don't sell the entire portfolio. This is
That's
long-term
right.
investing.
Don't pay attention to the talking heads on Bloomberg or CNBC. You don't want to be scared out of the market. Uh, Really, you want to stay in, and that's what we try to do from a quant perspective. Is we just focus on the data. So at Seeking Alpha, we have a quant strategy. Not all quant strategies are the same. We tend to use a quant strategy, what I refer to as a GARP approach. That's growth at a reasonable price. But it's a little bit more than that. We're looking for companies that are collectively strong on value, growth, profitability, EPS revisions, and momentum. And really, what we do is not that much different than most analysts that work at either Morgan Stanley or Merrill Lynch or Goldman Sachs. The large difference is when we look at those factors, we're not doing it for a single stock at a time, or even a dozen or 2 dozen stocks. We're looking at most investable stocks throughout the world, being in the United States or ADRs. And the ADRs are American Depository Receipts that reflect shares of foreign companies that trade in the United States. So we use the same fundamental process as most analysts, but we juice it up with our computer processing power. And that gives us the ability to call it quant. And we can rank stocks. And at Seeking Alpha, we have about 4,700 stocks in our quant universe. Then we break it down by sectors. So it literally gives us the ability to rank each stock throughout the whole universe or within its sector. And that is the magic of our quant at Seeking Alpha. So specifically, AlphaPix is a product that we designed because when you do perform investment research, it can be a lengthy process that is very time consuming. So what we decided to do with AlphaPix is a little bit more than 2.5 years ago, we offered up our very best quant strong buys on a monthly basis, just providing 2 ideas a month. So on the trading date closest to the first of the month and the 15th of the month, we send out an article, and we also post it on a separate AlphaPix platform. And as you can see, the performance has been very strong since we started this process. So going back to July of 2022, AlphaPix is up 135% versus the S&P for the same period, which is up about 45%. So pretty much, we were really fortunate since inception, month in and month out. Our performance was very, very strong versus the S&P 500 up until the last month. And a lot changed in that last month. As you know, or you're probably familiar, markets have taken quite a hit. But what I want to highlight here is some of the performance that we're taking a look at. Year to date, you can see AlphaPix is actually down 9.3% versus the S&P, which is down 6%. So year to date, it's actually underperformed a little bit. On the 1 month return, though, being the last 4 weeks, you can actually see AlphaPix is outperforming the S&P. And there's a good reason for this. And many stocks in the AlphaPix portfolio that have very strong fundamentals have had incredible momentum over the last 2 years and last year. And what we have found over the last 4 weeks is basically the market has rotated from stocks that had good fundamentals into safe haven stocks like utilities or consumer staples, sectors that typically have much lower growth, but reliable growth. And as a defensive mechanism, the market has moved en masse to those particular sectors. So that really occurred during the months of, I guess, towards the end of February, March. But you can see in the last 4 weeks, it's changed a little bit. And that's why I wanted to highlight this 1 month performance for AlphaPix, where we look for stocks that are collectively strong on those factors that I mentioned. So you can see if we went back to February 18th, this is clearly a different picture. And this is the picture that I was referring to before. If you looked at the 1 year return, the 3 month return, the year-to-date return, the since inception return, AlphaPix was crushing it across the board, but we ran into a fairly big problem with the markets rotating out of those companies that had good fundamentals. So I sort of use this as an example of where we were on February 18th versus where we are today, year to date. So you can see that year to date performance is down, but the 1 month return is returning in favor of stocks that have good fundamentals. So what has created this economic backdrop and this market backdrop where there's been so much uncertainty? Well, April was certainly a very volatile month. The US announced sweeping new tariffs on April 2nd, including a baseline 10% tariff on most imports. Our major trading partners were affected by this, being China, the Eurozone, Japan, and others such as Canada and Mexico. There was an immediate market reaction to this. The S&P was down 4.8% in one day. The Dow Jones was down 4%, and the Nasdaq was down 6% in one day. Its worst downward performance since the pandemic. And the volatility index, the VIX, absolutely surged above 50, which it doesn't do that often, as you can see, going back in time. So April was a really volatile month for the market. There continues to be a lot of uncertainty out there, hence why there was this great rotation in the market by investors selling out of consumer discretionary stocks or tech stocks, communication services, really anything. It doesn't matter how good the company was in terms of their top line results, their bottom line results. The market sold off a lot of these stocks with good fundamentals and focused on the defensive stocks. And I always say fear often fades and the markets do return to fundamentals. These periods of fear are usually short term. Perhaps it's 1 cycle, 2 cycles, maybe 3 to 9 months, but markets tend to return back to fundamentals. And when they do, the stocks with strong fundamentals really rip. But yeah, here we could see by looking at the downstream effects of the tariffs, which continue to drive uncertainty. And if you look at the right-hand side, you can see that the IMF has cut their global growth forecast fairly significantly from where it had been. Consumer confidence has slid for the fifth straight month in a row. As I mentioned, the IMF slashed their growth rates. There are risks of a weak labor market. You can look at the newspaper every day. You see large companies are starting to cut labor forces. So our expectation is that unemployment is going to start to move up, and markets ended April below the year highs. So the 52-week high was really in February. So it's sort of still bracing for ongoing volatility, even though we've had a move in the market for the last couple of days. There is still a lot of uncertainty out there. And Daniel, this is a great slide. I was wondering if you could tell people about this a little bit.
Yeah, so as you were just talking about the consumer, I think we also do need that reminder that the stock market is not the economy, right? And this is where we go and we look at these companies with strong fundamentals, a lot of them ending up in the AlphaPix portfolio, but you always want to listen to what management says. And I think what really speaks volumes is how they're spending their money, the CapEx they're putting forward, or the things that they're doing with their excess of cash flow. And this was a really interesting chart from BCA Research that just showed that the massive pullback of corporate confidence and spending on CapEx is pulling back from this uncertainty of what's going on in the markets. But I will say on the other side of the coin, I just pulled up Visa's earnings as we were talking, since they just reported after the close. And this is a company that just approved a new $30 billion multi-year share repurchase program, right? So follow what managements are doing of these fundamental companies. Another one that we were talking about earlier, Brinker International had great earnings this morning. Companies like this, listen to what the management company is doing and watch what they're doing with the spending of their money, and that'll help you going forward as well, just like you do in the AlphaPix portfolio.
Yeah, it's really good point. There's corporate confidence insecurity, there's consumer confidence insecurity out there. So we've had a number of companies that have had really good top line and bottom line results, especially the ones in the AlphaPix portfolio. But because consumer confidence is so low, and that's driven by fear and sentiment, it takes out of the stock prices. So as Daniel mentioned early on, the two are not related, but what I want to highlight is that, again, fear often fades and the markets do return to fundamentals.
It
So
creates opportunity is what we're trying to say.
exactly, yeah. So recovery on the horizon. Well, as I said, markets did start to stabilize a few days ago, and we are seeing some strong earnings coming from tech giants. The Nasdaq has had a 6.7% gain since the week of April 21st. If you look at the far right side, you'll see the CNN Fear and Greed Index, which is in the fear area right now at 36. But if you looked at it 1 month ago, it was actually an extreme fear at 21. So it's sort of coming off the bottom here, which is a fairly positive sign. The S&P 500 is flat. The Dow is down about 2%, but they are both still off their 52-week highs from February. And we're still seeing this in risk off in terms of sectors that are dominating the indexes that are being dominated by sectors. You can see the year-to-date performance is clearly in the camp of the safe haven sectors. So utilities year-to-date up 3.96%, consumer staples up 2.49%, healthcare up 0.75%. These are the traditional sectors where investors go to in times of uncertainty because they know, Pepsi and Coca-Cola, people are still going to want it. They're still going to need paper towels. They're still going to need toilet paper. So they tend to focus on the consumer staples sectors. People are still going to need electric and water. So they go to the utility sectors. Conversely, the sectors that had done so well for the last 2 years have gotten smashed year to date. You can see consumer discretionary is down about 11.9%. Technology is off about 10.5%. So those are the sectors that have performed really well up until this year. And you can see they're off sharply year to date. So what is all the fear going on with the market? Well, we've mentioned tariffs a lot. And what I want to highlight is with fear, market sell off. So I wanted to highlight since 1980, the market corrections we've had, how long they've lasted. And what we really found by this, when you see it on the right-hand side, that's actually quite a lot of correction since 1980. And what we find is that the markets pretty much enter a correction every 3.2 years. And the median pullback is about 173 days. So as of April 29th, the S&P 500 has pulled back about 9.5% from its 52-week high on February 19th. If you were to look at this, if we were having this conversation about a week and a half ago, the S&P would be about 15% off its high from 2 weeks ago. Now it's off about 9.5%. Based on the data that you look at on the right-hand side, taking a look at all those different corrections, the average decline is about 20%. The median decline, the average decline is 25%, and the median decline is 20%. And you can see the median days that decline lasted, as I mentioned, is 173, which would put us at about August 9th, 2025. So, we're not sure if it's over, but we do know that we did hit a vital point. The market's come back a little bit, but the S&P 500 was off 15% from its 52-week high already. And there is a point behind that, which I'm going to tell you, not on this slide, but in the next slide. But what I do want to highlight is AlphaPix and how it performs in a bear market. So what we were looking at there were market corrections and some bear markets. When we actually started AlphaPix, it was in a bear market. So in 2022, that was the last time we had an S&P 500 bear market up until this recent period. January 1st, 2022 marked the peak of the market, and it actually sustained a 25% decline going all the way to October of 2025. The bear market was driven by high inflation, rapid interest rate hikes, global economic uncertainty, and geopolitical events such as the Russian invasion of Ukraine, which was very fresh at that time. So AlphaPix actually started July 1st, which was sort of in the midst of that bear market. And it had a big focus on energy stocks, which was really surprising because since I created AlphaPix, I could tell you during May and June, the energy stocks were getting completely crushed. I mean, a lot of people actually thought I was crazy for starting this product back in July of 2022. But our quant model said energy stocks were the place to be. Analysts actually were moving their estimates up. The valuation frameworks looked very, very good compared to most other sectors. The growth framework looked good as well. So a number of those stocks were focused at the top part of our quant model, and hence were amongst our very first picks for the AlphaPix, which started in July of 22. And you can see the returns. So on the right side, you'll see AlphaPix returns from July 1st, 2022 to October 12th, 2022. You had Valero up 6.6%. You had NUE up almost 13%. COP up almost 28%, and AMR up 22%. In the same period, the S&P 500 was down 6.49%. So we're sort of in a period now where we're in a bear market, not quite as deep into it as we were back in July of 2022, which, as I mentioned, January 3rd had marked the peak, but we're there. And the reason why I want to highlight this next chart is that bear markets create buying opportunities for quant strong buys. Quant strong buys being stocks that have very good fundamentals. So what I'm highlighting here on this chart on the right-hand side, we went back to 2010. And believe it or not, since 2010, there have been 5 market pullbacks of 15% or more. So again, that's 5 market pullbacks greater than 15% since 2010. And what we found was that if you bought the market when it was down 15% and you held it for 2 years, your return on the S&P 500 was almost 50% from that 15% pullback. But what's even better than that is if you bought the top 10 quant strong buys and held those for 2 years, they were up on average 117%. So the point that we really want to highlight is that these bear markets and these pullbacks create terrific buying opportunities. So investors who purchase those top 10 quant strong buys, as I said, did really well by holding on to them for the following 2 years. And look, even if you didn't buy the quant strong buys, just buying the S&P 500 during that 15% pullback, you did very well on your return. So again, this sort of brings us to where we are over the last 4 weeks. As you can see, AlphaPix is up 3.28%. The S&P 500 is down. We went through a period from February and March where there was a massive sell-off in many of the Alpha Pick stocks, but we now are finding ourselves at a point where we're off the bottom of the market. But more importantly, even if the market continues to go down, some of the stocks that had the best fundamentals and the strongest momentum over the last 1 to 2 years have already come off significantly. Some of these stocks are down 20, 30, 40%, yet when they've released their earnings, they've beaten top line and bottom line estimates. So again, what really speaks to this environment is fear and sentiment and people selling anything to focus on like those utility stocks and consumer staple stocks. And frankly, the consumer staple sector and the utility sector just do not have strong growth rates. So even by comparison to the S&P 500, the growth rates are far lower. So the stocks don't normally have the same fundamentals as many other companies in the S&P 500, let alone Alpha Picks, whose job it is to focus on the companies with the best fundamentals. Momentum is a really important factor. I mentioned there are 5 factors that we look at from the quant system, being value, growth, profitability, EPS revisions, and momentum. So what I want to highlight here is you can see this is a year-to-date chart. And you can see momentum, which is in purple here, price momentum. It came off really sharply from February through March. Really, the only thing that came off sharper than that was volatility and market cap size. And market cap size, it's not much of a surprise because the companies with the biggest market caps, the Mag 7, actually came off really sharp. They underperformed Alpha Picks and the S&P 500. So size did not work well year to date. Volatility has actually been all over the place, but momentum, what we want to highlight, really came off quite significantly. And many of the stocks in Alpha Picks had very strong momentum for the last 2 years, but this 4-week period was disastrous for many of the stocks. But you could see the stocks in April really started to rebound that had momentum as a leading factor. And my anticipation is, even with the uncertainty that's out there, many of these stocks with strong fundamentals, they've come off so sharply that even if the market comes down, it's unlikely that we'll see the stocks that have strong fundamentals continue to sell off to the extent that they did. And over the long term, you could see this goes back 10 years. So the very top line is the S&P 500. Below it are the factors that make up the S&P 500. And you can see the best factor over the last 10 years beating valuation, beating growth, beating size was momentum. And that is one of the key factors in our model. It's one of 5 key factors. So you can see over the last 10 years, it's worked. But I can tell you there's actually empirical studies that go back 200 years that show, compared to all other factors, momentum is the best factor that's out there. So it is one of the factors, but we're looking for companies that are strong, have strong growth rates, and also good valuation frameworks and good profitability. So it has to be strong in 5 collective factors to be a quant strong buy, let alone an Alpha Picks. And you know what? Our process works. For the companies that have reported just recently, we're in a new earnings season for Q1. 9 out of the 10 Alpha Pick stocks have beat earnings expectations, and that's exactly what we're looking to do. We can't tell you what's going to happen necessarily with the price of the stocks when you're in a period of economic uncertainty and market uncertainty and tariff uncertainty and inflation and interest rate uncertainty. The stocks, are definitely impacted by fear and sentiment. But in terms of what the companies are doing, they're doing exactly what we want, and they're coming through with top line growth and bottom line growth. And for the most part, even if we went back to the fourth quarter, you could see that 87% of the Alpha Pick stocks had beat earnings in the fourth quarter. Now, we've shaded out the names here because that would be fair to the current members of Alpha Picks to show those names. We'd be showing you the portfolio. But what you can see is many of the companies that had reported during the fourth quarter had beat expectations. And even more importantly, if you look to the far right, we have that proprietary EPS revision grade. And that revision grade shows you actually, it gives you sort of an instant characterization of the number of analysts that are taking their estimates up or down versus the sector for that company. And you can see widely, it's almost a straight A report card, couple B pluses there. But for the most part, analysts continue to like those companies and revising their estimates up. So that's a
So
very
Steve,
positive
Steve,
sign.
real quick, I guess we
Yeah.
got an intern that moved this box square on us or somebody, but I think people can note there at the bottom, MFC, that ticker kind of slipped through the cracks here. But I just want to highlight real quick because I was looking it up in the portfolio as you were talking about. So that was a stock that was picked November 1st, 2023, and so far has returned 74.5% since then.
Wow.
Still a strong buy. So sometimes these stocks that you're talking about that have these long dated time horizons, great management, the valuation, the metrics are all good. You let them ride in the portfolio. And I can't congratulate you enough. But I was just going to pinpoint that one because someone let that one slip through.
That is, you know what? It's a silver lining. I'm glad everybody got to see that. That's Manulife Financial Corp. Financials could be a fairly good place to be in this environment. That stock has done very, very well for the AlphaPix portfolio. And Daniel said it's up about 75%. We actually have what we call a winner circle, and we have a number of stocks that are actually up over 100%. And once they're up over 100%, we actually just continue to let them ride. So we have a rule in the portfolio, and this sort of bring me into our next area. You know, part of AlphaPix is every month we send you 2 ideas, and really what I want people to do is ignore the talking heads, ignore the emotions of the environment. Don't even pay attention to the market moving up or down. Just stay really disciplined in your process. And that is the sort of importance of dollar cost averaging. And you will find consistency on average creates excellence over time. And that's how you beat the market. And that's how you create wealth over time. So, really, when the market has major pullbacks, that's actually an ideal time to be investing. So, I can't actually think of a better time to be recommending AlphaPix than right now. Many of the stocks in the portfolio actually have come off sharply that have excellent fundamentals. And we've actually noticed in the last 4 weeks, many of the stocks that had come off sharply have been rebounding sharply. And that's exactly what I was talking to before. Stocks with a strong momentum came off, but now people are returning to stocks with good fundamentals. There's another thing I want to point out with AlphaPix is it's a portfolio designed for capital appreciation, but we also do have a number of stocks that pay dividends. So if you are like worried about the environment that you're in, when you look at AlphaPix, you don't have to necessarily just pick the last idea or the last 5 ideas. You could look at the entire portfolio. And some of the stocks in the portfolio pay dividends. And in fact, there's 15 stocks in the portfolio that pay dividends, and the average yield is about 2.02% compared to the S&P, which is at 1.23%. So not quite double, but significantly higher than the yield on the S&P. And most of these stocks, or all the stocks, actually have superior dividend safety grades and growth grades, which are really important because you don't want a company that's going to cut its dividend. So something I try to get people to focus on in this kind of environment is what I call a barbell investment strategy. You want to put half your portfolio perhaps in some of these good dividend paying stocks, but the other half, you want to look at some of those stocks that came off like 20 or 30% because they still have good fundamentals. And it's not their fault that the stock sold off. It has to do with the environment. So you actually want to try to identify those companies that have come off sharply because those are the ones that will have the biggest rebound. So in terms of AlphaPix and how it compares to the S&P, one thing I want to do highlight is we actually have one stock that's up 500%. We have 7 stocks that are up over 100%, and there's only a total of 38 stocks in the portfolio right now. And when we take those stocks and we look at the metrics compared to the S&P, if we look at the revenue growth rate, the average revenue growth rate for the AlphaPix portfolio stock is 13.7% compared to the S&P 500, where the revenue growth is about 5.4%. So you can see the top line growth is significantly stronger than the top line growth for the S&P 500. But what's really strong is bottom line growth. EPS growth on average for the AlphaPix portfolio is a whopping 36% compared to the S&P 500, where the growth is just about 13%. So you can see the growth is far stronger, yet the valuation framework is much better for AlphaPix. So basically, it's a cheaper portfolio. The average PE is about 18.4 times, where for the S&P 500, the average PE is about 23 times. So you're getting stronger top line growth, stronger bottom line growth, and a better valuation for most of your AlphaPix stocks. So a little bit about what AlphaPix is. It is focused for long-term investors. We're not trying to put out a high level of ideas. Um, Seeking Alpha's got a great platform, but like on any given day, if you look at all the quant strong buys, there could be about 350 quant strong buys, and we do rank them, but it takes a bit of work to identify your portfolio. So what we try to do at AlphaPix is make it a little bit easier for you. We do the research for you, and we take our top 2 quant strong buys every month. Again, it's designed for capital appreciation and long-term investors. We only remove stocks when they are sells, or even if they're a hold, we keep them in the portfolio for about 180 days. Whenever a shift occurs, if there's a rating change, you get notified. If a stock is being sold, you're notified. An email goes out immediately if you're a member. But we also have a separate platform where you could go to the platform, and it's very transparent. We have every single write-up on every stock that we've written about. And we also show the performance for the stock from the time that it was picked. We also show what the weight of the stock is in the portfolio to be completely transparent. And we compare it to the S&P 500, each and every idea. So how does it work? As I mentioned before, for a quant basis, we're looking at those 5 core factors that I mentioned. But for those 5 core factors, on each factor, so if you look on the right-hand side and you look at the factor grades, that is what gives you sort of an instant characterization. So that's taken from one of our stocks off of Seeking Alpha Premium. When you look at that valuation grade, that is relative to the sector. So you know the valuation grade of C minus would be in line with the sector. But when you look at the growth or profitability or momentum factor grades, that is telling you that it's significantly stronger than the sector. So it's literally an A plus compared to the sector, or the profitability being far stronger than the sector. For AlphaPix, we have additional parameters that helps us to filter it down just to the 2 ideas every month. So the style characteristics that are a little bit different, in order for the stock to be admitted, it has to be a quant strong buy for 75 days. The market cap of the company has to be over 500 million. And we also look for average daily dollar volume of about 10 million. And what does this equate to? It equates to maybe 2 to 3 trades a month. You have the 2 ideas that we recommend on the trading date closest to the 1st and the 15th, and the occasional sell that comes in the portfolio. So it's not really a lot of trading. Again, it's designed for long-term investors. Part of the buy criteria, as I mentioned, it has to be a strong buy for 75 days. We just look at US stocks or ADRs that are primarily listed in the US. So not all ADRs, only the ones that are primarily listed in the US. We do not invest in REITs for AlphaPix, and some of the other factors here that I already mentioned. We sell a stock out of the portfolio when the quant rating drops to strong sell or a sell, or if it's a hold for 180 days. At that point, we figure it's dead money. So we move it out of the portfolio and we make room for the other stocks. How can you start with AlphaPix? So if you become a member, you immediately have the platform available. You can see all the stocks that are in it. Best way to get started is maybe 3 different options. You could look at the most recent 5 strong buys and add those stocks. You could buy the entire portfolio if you have a lot of capital. We don't know what your risk tolerance is. We don't know how much capital you have. So that's why we have a number of different options for you to start. Or you could just cherry pick, and you could read a couple of the ideas that we have, find what works best for you, and just pick a number of stocks that work best for your portfolio, your style, and your risk tolerance. There's any number of ways to do it. And Daniel, I think that's it for the presentation. Do you
Yeah,
have any
thank you so
questions?
much, Steve. I mean, this was a lot to cover, right? Obviously, we're in volatile markets, but I think having a game plan, which is the systematic approach of this strategy, prevents people from jumping into the fear of a VIX spike and a market pullback. And then, I mean, we're all seeing the tariff news kind of get unwound. That was a kind of the shock, right? But your portfolio here, you've been communicating with everybody there. The community loves you guys. The analysis that you put out whenever you put out a pick, which I do want to note for people, when that pick comes out on the first day of the trading month, or the 15th, or the immediate trading day after that, it is at 12 p.m. Eastern when you release those picks during market hours. And that seems to have really helped your community as well when they enter their positions. There's one question that always comes up that we have to address, because it happens every time we talk about AlphaPix, is people want to know, why not just create an ETF? Why not just say, hey, here's an ETF, everybody invest in the ETF, and we call it a day?
Well, yeah, it's a good question. We do get that a lot. We're not an asset manager. We're not a money manager. We're an investment research platform. We have a terrific news team that collects news for most stocks throughout the world. We have a lot of contributors that write articles on our companies. I write a lot of articles as well on our premium site, but we are not an asset manager. We're not a broker dealer. We're not an investment advisor. So it's just not our business. But we do have a great model for stock selection. I will tell you that.
Yeah. And also to note, you got to remember if there is an ETF created, all of those positions have to be listed. So, what are you really getting? Where does the advantage of that alpha go? So, keep that in mind as well. So obviously there's other people asking about does it work in IRA plans? It's this is your research platform, everyone. So how you handle it within your brokerage accounts or IRAs is completely up to you. Steve, the strong buy ratings, the ratings that are pulled in, how often do those update?
Every single day. So that's what really separates quant from, the conventional fundamental analysts. Fundamental analysts will typically, they'll cover 12 to 20 stocks and they may have a write up, 3 or 4 times a year on their stock. And from my vantage point, one of the reasons why I like quant a lot is I personally find it really hard to make an investment decision based on a research report that is a month old or 2 months old. That's like looking at a newspaper article from 2 months ago and trying to make an investment decision. So the beauty of quant is we upload the data points for those income statements, balance sheets, cash flow statements, all the ratios every single day, and we compare it to all the other companies in the sector. So you're getting a fresh directional recommendation, whether it be buy, sell, or hold every single day.
All right. Now let's dive in here. There was another question about if you sign up for Alpha Picks, do you also get premium? No, those are two separate products offered by Seeking Alpha, just so that you are all aware. When you sign up for Alpha Picks, not only do you get access to the portfolio, really intuitive platform. It's very simple, very transparent. All of the previous closed picks are there, the returns of those as well. Also, I was thinking about it earlier because you had talked about launching this product in the middle of the bear market of 2022, and I remember early on because I was here with you guys. I was it Travelers of America. I think you saw as an opportunity, and because the market had got wrecked, it was within like 6 months that company got acquired, right?
Travel Centers of America. Yeah, that was one of our original picks, and BP bought them.
Right.
So that was like our first victory among many victories that we had. There's been a number of stocks that are up over 100%. I think 7 of them, and Travel Centers of America was the first one to go. And
My whole thought there was when the market pulls back, obviously we're not the only dumb ones or smart ones in the world, right? Management companies are looking to say, okay, stock prices are pulling back, companies are looking a little fearful. Who might we merge with or acquire in this situation and come out stronger on the other side? Sorry, random tangent, but it's just another thought, another win from the portfolio. Let's see. There was a question here about factor grades. The factor grades going into the ratings, are those coming to the Alpha Picks platform?
the factor grades, yeah, so that we pull the stocks for Alpha Picks from our CK Alpha Quant system. So we are using those grades every single day. And if those grades change, it could have an impact on the stocks in Alpha Picks. And sometimes they do. If a rating changes to a sell from a buy, that day we would pull it out.
All right. And there was another question about how do you get alerted when a stock is sold?
So as an Alpha Picks member, you would get an email that day. It would come out at 12 o'clock. So we actually get the notification to sell. I have no sort of early look into our quant system. And that's actually a fairly good question because we would find out the day of as well. So it's virtually impossible for me to predict which stock is going to have a rating change, which stock is going to be come out as a strong buy or a buy, because the model is basically going through 60 million data points every single day, and it's comparing each company to every other company in this sector. So it's literally ranking on a lot of different scores. So we would actually find out the same day, and as soon as we find out, we start prepping the article, and it gets published at 12 noon.
Now, Steve, you've had stocks within this portfolio that have been hit by short sell reports
Yes.
from various research companies. How have you and the team? I will share my viewpoint, but I want to leave it up to you first. Is how are you and the team? How do you approach that when it goes into the strategy of the portfolio? Because that can definitely shake some nerves.
You know what? Most of the short reports, they're, investment research platforms that are paid by hedge funds to highlight positions that they're short. More often than not, it creates a fairly good buying opportunity. There's on occasion that, they could hit some information. But even when they do hit, the perfect example is a stock called Super Microcomputer. That position, when we entered it into the portfolio, I think within like the first 2 weeks, there was a short report on it, and the stock immediately fell by like 20 or 25%. And then it proceeded to go up over 900%. And then when it was up 900%, there was another short report that came out that was very damning. And that one was a little bit more accurate in what was going on. And the company actually delayed filing. As soon as they delayed filing, we actually pulled it from the portfolio. It's a rule that we actually do have now. If there's a delayed filing, we pull it from the AlphaPix portfolio. But that was a stock that went up tremendously and still is actually continuing to do fairly well based off of the sort of AI revolution and in the product that they make for cooling semiconductors in their servers. But the company had some issues. It was highlighted. So on occasion, their short reports could have something that is tangible, but more often than not, it presents buying opportunities.
Now, I'm glad you mentioned SMCI because I think that leads into a good point that I don't think we've dived into enough yet. Is when you have a position in the portfolio and you've had all these winners, right? So the weighting of that stock in the portfolio increases and increases and increases, and eventually becomes kind of risky. So how do you manage as these stocks turn into winners? How do you manage those positions over the long run?
Yeah, very good question. So we actually do want to make sure that no single position is too much weight in the portfolio. So we have a rule that ever hits 15% of the weight in the portfolio, it automatically gets cut back to 10% position. Supermicro surged so quickly that it actually went up to a 20% position in the portfolio, and we cut it back from 20% down to 10%. And it was at that point that the stock was up 900%. So we've had a lot of winners in the portfolio, and the quant system works well. And even when we reduce the size of it, we pretty much topped the market. Like it was just a perfect time to cut back the position.
Yeah, amazing. So there's a few questions here. It's kind of funny, but I guess people love your coffee cup and they want to know where they can
Oh,
get Alpha
thank
merch.
you.
So you might
Here.
need to create some Alpha Picks merch as well. Let's see here. Just going through the questions real quick that everybody has here. The weighting of the factor grades that go into the quant rating, are each of the factor grades weighted evenly?
Well, you're getting some great questions today. So the answers to that is like no, they are actually not equal weighted. When we look at many, many different factors. So within the camp of value, there's many metrics. Under growth, there's many metrics. You have revenue growth that is trailing. You have forward revenue growth. You have EBITDA growth. You have EPS growth. For value, you have PE. You have price to book. You have price to sales. So there's many different metrics, and what we know is some metrics have a greater predictive value than other metrics. So based on that knowledge and many years of back testing, many of our factors have greater weights and some have lower weights. So the factors are not equally weighted. Really good question.
Yeah. All right. So there's a question here. Would you ever add an ETF to the portfolio?
Not for AlphaPix. We don't have REITs in it, and we do not have ETFs in it. And the reason why do we have REITs is, REITs have many of their own very centric factors. So you'll have, by example, FFO and AFFO, which most companies don't have those factors. Those are very centric to REITs. So we don't include REITs in here, and we don't include ETFs because we're picking stocks for this model. We're not picking sectors. We're a very bottom-up approach.
All right. There's a question that just came in. How many trades per year to follow all your buying recommendations and sell again. So obviously going back to the question of you're not trying to trade every single week, are you?
We are definitely not. And again, this is designed for long-term investors. So typically, most months you'll just find that there are two buy ideas on the trading date closest to the 1st and the 15th, but occasionally there is a sell. So typically, you don't have more than 3, maybe 4 trades a month, but most often it's the 2 buys a month.
All right. Steve, we've ran through these questions quite a bit. Let's go ahead and wrap it up here. Can't thank you enough for your time today. The market overview was really, really great. Obviously,
Thank
we're
you.
all excited to see where AlphaPix continues to go through here, especially if the market pulls out of this slump that we're in, right? This opportunity of the moment buying these companies that have great valuations and continue to be earning. So can't thank you for everything you and the team do. So much research, so many hours go into it, and you just make it so much simpler for us. So I can't thank you enough. And everybody watching, check out AlphaPix. The community that Steve has built is incredible. The amount of analysis they put out, they're always on top of answering your questions in the comments of the articles as well. They do webinars every month. I mean, you really you just put so much effort into this. So I really hope people can
Thank you.
take advantage of it. Steve, anything you want to say before we hop off here?
No, I just really appreciate you organizing this today, and I'm glad that we were able to have this now with the market being down, and many of these stocks having already sold off sharply. I'm actually pretty pumped to see, as I mentioned, the momentum in many of these stocks is really starting to come back. So I think it's a great time to be looking at AlphaPix. So
That's a
thank you again for
great thing you
organizing it.
actually said, though. Remember how we've always done these webinars, and people are like, "You're telling me to buy at the 52-week high," and we had to go
Right?
into why momentum works and why it's a great factor. But now we actually have a moment. Good point out. I like that. I should have said that. All right, Steve, let's get on out of here. Everyone have a great rest of the week, and we'll see you here in the next webinar. Take care.
Thank you very much. Bye bye.